Good morning, everybody. We are out here in Waukesha, Wisconsin, just west of our office here at Nations Lending to meet who you will soon meet, Ed Goggins, a lender here in the area, to go over a little bit about not only the lending side, but also his personal real estate stories you guys have been seeing. So, if you guys like what you're about to see, please go to our website, go to the end of this video, click on some of our other videos. We've got walkthroughs, podcasts, we're going out seeing people's stories, tons of cool, exciting content out there, and a bunch more to come. So please go to suvproperties.com, go to our YouTube, and we'll see you there. We'll see you guys at the end.
Good morning, my name is Melanie Eden, broker with SUV Properties. I'm here with Ed Goggins of Nations Lending. Ed and I have been working together for at least 20 years. He does real estate loans for investors, owner-occupants, and he's going to share with us some of his real estate stories about his journey through investment real estate and investment lending over the course of the last 20 years. So
awesome.
Take it away, Ed.
All right, thanks, Melanie. Hi, good morning. As Melanie said, I'm Ed Goggins. I'm with Nations Lending. My real estate story is back in I'm going to date myself a little bit here. Back in the late 90s, my brother and I bought real estate and managed real estate for a time. I owned my first duplex when I was 22 years old. And I lived in that duplex for quite a time, rented out the lower unit, lived in the upper unit as a single person. Was a great investment because I was able to, at that time, own a home, only pay about $300 a month, and my tenants paid the majority of my mortgage.
Do you remember what your interest rate was on that?
I did a WIDA loan on that one, and it's the same rule today. On a duplex, WIDA was 5% down. I want to say it was in the 8s back in the 90s. I don't recall.
My first interest rate was 8.25, and I
Yeah.
bought my first place in 95.
Yeah,
So probably similar.
probably similar. Yeah. So it was around in the 8s, and that people think that's nuts, but you deal with what the market is.
That's right.
Right. So
Makes today's rates look kind of
yeah, and today,
refreshing.
I mean, they're not at the lows right now, but they're not out of this park terribly high either. So then I owned that duplex for probably 6 to 8 years, and then went back to school, earned my bachelor's degree in education. After that, I realized that at the time I was engaged, had 2 children already, moved forward quite a bit faster there, and I realized that on a teacher's salary I couldn't support my family with what I would have made there. Would have been very difficult with my income. So I had a friend at the time who was a loan officer, and I asked him what he did for a living, learned about the business from him a little bit, went to work at his company, and I've been doing loans for the last 20 years. So when I got into the business, I had a family to support, and I had to think, okay, how can I work to maximize the amount of loans from one client and not always have to go back to a realtor or go back to a first-time home buyer, or continue to cultivate those relationships. And I quickly realized, being an investor, a real estate investor already, that real estate investors don't bring you one loan, they bring you 2, 3, 4, 10, and multiple loans out of one relationship. So I started to go to real estate investor meetings, work with other real estate investors, and then those loans, as those that are real estate investors know, they are not always the easiest loans to do, because real estate investors get creative. They have ideas of how they would like to do things, and those don't always fit into the lending box. So I've worked with many investors over the years, coaching investors about different ways to work to make what they're trying to do fit into a conventional Fannie Mae, Freddie Mac mortgage. Now, there are other programs out there. They're called DSCR loans, or debt service coverage loans, that we as a lender can close in the name of an LLC. Those loans are not based off of a debt ratio of the client, they're based off of a debt ratio of the building. So each building has its own basically look at to see if that building qualifies for the debt ratio. We still do look at the client's credit report. The client still doesn't need to have assets and down payment, but it is a way to finance an investment property these days without having to qualify through traditional Fannie Mae, Freddie Mac means. We also have bank statement programs are out there now, and your traditional Fannie Mae, Freddie Mac products are out there. And we are very seasoned with how to help investors use the rental income to qualify, what the rules are, whether we're going to need tax returns, whether we're going to need leases. So that's how I really got into the business, was working with real estate investors, and that has proven to be a great asset, because I've learned to do the more challenging loans, to get them done on time, communicate with everyone. So when we work with a first-time home buyer, or we work with someone trying to buy a second home or something more traditional, those loans are not always, but those loans typically there's not as many challenges to them as there are with some of the real estate investor loans. So I myself have been a real estate investor since the late 90s, mid to late 90s. And the most I had was because I was working full time with a family. I didn't do the rental real estate, rentals as my full time gig. So I had the most was 7 doors. It was 5 buildings. 2 were duplexes. I managed those for about 20 years now, and work with the ups and downs of the tenant market. My approach with my tenants has always been, I'm going to be firm. I'm going to follow the rules, and I'm going to be fair. But unfortunately, sometimes tenants try to push that envelope, and when they do, I just go back to them and say, listen, these are the rules. This is what we're going to need to do. And if you can't follow those, that's fine. We get it, and we're just going to have to work you through the process, for everyone to move on to the next step.
Tell us your most unique tenant story. I think the rat one you explained earlier.
Yes.
What we want to hear about.
That one's wonderful. Yeah. So I owned a house up in Richfield, Washington County, and it was I think it was a 2,600 acre farmhouse on 3 acres. Nice house, very nice house, and had some tenants in there for about a year or so. And I get a text one night, we're losing the battle with the rats. And I'm like, what? Text back, what battle with the rats?
The important part of this, one of the important parts, it's always Saturday night.
Right, right.
Or a holiday. That's
right.
when you get that stuff.
Right. So then right away, go there the next morning, of course, because it's late at night, start to see the damage. There were rats. They chewed through drywall. They took over the basement. And this was a nice house, by the way. So it's not like this was something that was rough, dilapidated, and beat up. So I called Batzner, get Batzner out there, and they go through the process. They start to set out these black boxes to start to trap and catch them, and close up the holes. And when I met with them, and I said, listen, I've owned this thing for 10 years or so, never had this problem. What are these people doing? And this is a little bit of a jaded landlord, of course, immediately thought it was a tenant. What are these people doing, because I've never had this problem before, to bring these animals into this house? And he looked around and he's like, it's not them. I'm like, what do you mean it's not them? I said, I've never had this problem before. Well, Washington County, if you're not familiar, is rural, and this property was rural. So his best guess was there was a load of grain that came in that was full of rats, and once it unloaded, these rats spread out, and they found my house as a nice warm place to take up habitant, and that was his best guess as to what happened. He could not say anything. He didn't think it was a tenant. There was nothing on the property, and these tenants paid on time, were very cordial, easy to get along with, but I figured something was up, and it turned out
You just got the look of the draw.
I unfortunately got a very attractive house to rats, and I had to pay from then on in. Once the rats were under control, from then on in, I paid a $35 a month maintenance fee to Batzner, so I made sure they never came back, and that stayed on the property to this day.
Now that you're an experienced real estate person and have 30 years of real estate under your belt, what would you recommend to someone who's brand new, thinking about buying real estate with 30 years of wisdom to share? Pick one or two items and share with us.
It depends what your goals are. The goals are important, but make sure you think about where the money is going to come from, how you're going to finance this, and if you use some sort of short-term financing, where I have seen investors fail the most is a poor or lack of an exit strategy on their investment. So for example, if you're going to be a rehabber and you're going to use hard money and you have this plan and this structure, and then let's say you can't sell it or you run short and there's problems, you need to have enough money lined up to cover whatever that deficit is, or you could lose that loan and then never get another one down the road. If you're going to start off more traditionally, as I did, buy a single family, live in it, fix it up, do some repairs, or even a duplex or a 3-family or 4-family, live in it. Manage those tenants, get your arms around that, and then work to expand. Use the equity from one as time goes on and use that equity to buy your next one. And then collect that one, manage that, use the equity to buy another one. That's how I did it. I used the equity for my primary residence to buy my investments. I put a line of credit on it, used the line of credit for the down payment, bought something that needed work, rehabbed it, and then went on to my next one.
And I think you're kind of elaborating too that it's important to have some skin in the game, if you will, or some of your own money into it in the beginning, so you kind of have something to lose, so you have something to do it.
There are strategies out there where you can work to do this without any of your own money. And that's great. If you can work to leverage it and you're smart about it and you're intelligent about it and you have someone or you've learned the ways to do that, that is a much harder investor focus where those investors are working on only doing real estate investing. So that it can be done. And there's lots of private money lenders out there that'll do things. That's not the way I did it or the way I would do it, but I'm more of a traditionalist in that sense.
I think the bottom line is you still need an exit strategy. You always want to start with your end in mind, because just because you buy something today
Yes.
doesn't mean you're going to own that, whether it's 5 years from now or 30 years from now.
Yep.
So figure your way out before you buy it.
Your exit strategy and managing the monthly debt. Whatever that is, if you're buying something and you're going to get tenants in there to make that payment, that's great. You got to manage that debt, because that is where I've seen the most investors fail, is a very poor exit strategy or very unthought out how they're going to manage that property. Yeah, that's the big.
Well, Ed, thank you for your time, but before you leave,
Yeah.
we want to know your phone number and email address.
Well,
so
that would,
people can
thank you.
contact
Thanks, Melanie. My phone number is area code 262-366-5248. And you can reach me at ed.goggins@gmail.com or ed.goggins@nationslending.com. That's the best way to get a hold of me. You can text me at my cell phone number. I'm not too old to text. You can follow me I'm on Facebook, I'm on Instagram, I'm on LinkedIn. So if you want to check out some other videos about me, I'm out there on social media also. So thank you for the opportunity, you guys. I appreciate it. Thank you, Melanie.
Hi, my name is Melanie Eden, broker with SUV Properties. I'm with Caden Stanley. He's one of my agents. We just heard Ed's fantastic investor story and some great ideas on real estate investing and real estate lending. We want to thank you for the time you took to watch this video. Call Ed at Nations Lending. He does a fabulous job. And if you liked what you see, please like and subscribe. If you loved what you just listened to, go to our website, suvproperties.com. Email us, text us, do whatever you need to do to get a hold of us. We are real estate professionals spreading the knowledge of real estate around the world. Thank you for watching. See you next week.